Market structure. Market structure is the foundation of price action trading, describing how price moves in three phases: uptrends, consolidations, and downtrends. The goal is simply buy in uptrends, sell in downtrends, and avoid consolidations. Trends consist of two phases: impulses, strong moves in the trend direction, or the have corrections, which is simply pullbacks before the next impulse. This happened because the market works like an auction. Buyers and sellers only act when the price reaches levels they find acceptable. The main challenge traders face is misreading highs and lows. To avoid this, think of price as waves rather than every small move. This creates two perspectives: structure, the big move showing overall trend direction; substructure, the smaller moves within which swings which can also form mini trends. Mastering the balance between swing structure and substructure helps traders understand how the market works. So what I'm simply meaning is in what I simply mean here is looking at charts, we have to be able to pinpoint the highs and the lows, right? The highs and the lows. Now, in analyzing market structure, we should remember price move from left to the right. And in moving from left to the right, it moves in waves. As I said, price move in waves. Let's say this is a wave, right? Within this wave, we have substructures, substructures. So the thing here is, in analyzing price and focusing on market structure, we should be looking at the main structure rather than the internal structure, right? Now, this is GBP USD on the monthly time frame. How do I do to analyze the market? Remember, price keeps creating lows, breaking the lows to create lower lows, breaking the lows to create lower lows, keep creating highs, dropping below to create lower highs, dropping below to create lower highs. And remember, in market structure, it is very simple to understand how the market is moving. The market is moving in a series of waves. That is, market keeps on creating a series of lower high, lower low, lower high, lower low, lower high. Unfortunately, based on the way it's moving, there's a potential to tell us around here, there's a potential for the market to create a lower low. As simple as that. Now, on the monthly time frame, we know, okay, market is about to make the market is bearish simply because price is breaking structure to the downside, structures to the downside, right? Now, how do we do to make use of this opportunity? It is very simple. We scale down from the monthly time frame to the weekly time frame, having in mind the monthly time frame is bearish. And now on the weekly time frame, we are no longer needed to trade the whole price market. Why? Because we've already analyzed the market direction on the monthly time frame for the whole chart. What do we need to do? We need to focus on the most recent low and the most recent high, right? This is the most recent low and this is the most recent high. Remember, we have this high which went down to create this low. We have this high, we have this low. We have this high, we have this low. We have this high, right? We have four highs up here and three lows below here. Now focusing on the weekly time frame, if we have to scale on the weekly time frame, we have to focus on the most recent low and the most recent high, which is this. And based on due to the fact that we have to focus only on this most recent low and most recent high, mean everything which is within this zone is what we're focusing on. We don't no longer need this one when going down to the weekly time frame. And also remember, the lower the time frame we scale into, that's how we the lower our area of focus. Right now on the monthly time frame, we focus exactly on all of the charts. On the weekly time frame, we focus on the most recent low to the most recent high, right? Now, what do I do? We have to simply take our Fibonacci tool, mark the most recent low to the most recent high. That's it. We've marked it on the monthly time frame. Now we scale to the weekly time frame. Coming out to the weekly time frame, coming down to the weekly time frame, we know that okay, we've already marked out the zone or our zone of focus. So make sure we focus only on price movement within this zone, right? And on price movement within this zone, we have to analyze market, the structure and the direction of price. Remember, each time price creates a low and goes up to create a high and comes out and give us a pullback and goes up to break again the high, there's a movement upward, right? What I'm simply saying is this. Let me shift the charts to the left. Once price moves in a form of wave, right? Now, each time this high is taken out with this movement up to form another higher high, that's what we call a bullish movement. There's a potential the price will continue to break, to continue to form another high, continue to break, to continue to form another high. It means the market is moving in the bullish direction. It means demand is overtaking supply, right? With that simple concept, we come now again. We see clearly here that okay, what's happening with price? From this lowest point, market started creating higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. Right? We're expecting that it has reacted from here, it might create a higher low, right? Now, it has not yet happened. So what do we do? Now, we know that on the weekly time frame, based on the fact that the market is creating a series of higher highs and higher lows, it's telling us the market is bullish, right? It simply tells us the market is bullish on the weekly time frame, telling us there's a possibility for the market to go up, to break this structure and form another higher high. Because remember, all the highs were taken out. This high was taken out with this movement to form this higher high, which was later taken out with this movement up to form this other higher high, which was later taken out with this movement up to form another higher high. Now we're expecting that due to the reaction of price here on this demand zone formed on the weekly time frame, there's a potential for price to move up to take out this high to form another higher high somewhere. So it's telling us on the weekly time frame we are bearish. That is how we are analyzing the market structure on from the monthly time frame to the weekly time frame. Now, look at something. We're on the weekly time frame. How do we scale into the daily time frame, and how where do we know where we are supposed to focus on while analyzing price on the weekly on the daily time frame? Remember, if I zoom out the charts, right? If I zoom if I zoom in all these charts on the monthly time frame, we're focusing all on price within this area, right? But now on the weekly time frame, we're focusing on the most recent low, which form the most recent high, right? Now, on the daily time frame, what will we do? On the daily time frame, we will focus. Remember, now on the weekly time frame, we're focusing only within this zone, and now on the daily time frame, we don't need to focus on all of this zone. What do we do? We need to focus on the most recent low, we need to just focus on the most recent low and the most recent high. If we look at price, we have a low here, right? We have a low here, right? We have a low here. This low was formed in March 2023. This other low was November 2023, and this other low was January 2025. So basically, this low on January 2025 is the most recent low, right? And now we have this high. This is a high on July 2023. This is a high on October 2024, and this is another high on June 2025. We have three highs, but which is the most recent high based on date? This is the most recent high. So now, in scaling into the daily time frame, since was on the weekly time frame, we want to scale to the daily time. What do? We have to focus on the most recent low here, right? And this most recent high. And simple as that. After using our Fibonacci tool, to pinpoint to where we are wanting to focus on the daily time frame. And remember, we should have in mind the monthly time frame was bearish, and the weekly time frame was bullish. Now we go to the daily time frame and see what's happening. Now scaling into the daily time frame, remember we had already spotted our zone in which we wanted to focus on. So anything that is happening here with price, we don't need it, because this movement already has taken out all liquidity and all negative price action on the left. Now what do? We just need to focus on what price is doing from below here to here. This is our range of focus. Anything, any price within any price within this area is what we are focusing on at the moment. That's basically it. So I'm going chronologically so you understand the concept. Now, since we are supposed to focus on price within this area, what can we see? First of all, we look at the structure of the market. What is the market creating? Is the market bullish or bearish? See, it's clear. We can clearly see that the market created a high, a low, a higher high, a higher 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 low. Now, price has created a higher low. Remember, as I said, market created a high, it was violated with this move to create a higher high, which was later violated to create another high, which was later violated to create another high, which was later violated to create another high. Now, what are we expecting? We're expecting that as price is moving, it should come up and violate this high to create another higher high up there. So basically, now since it's price, and basically we can clearly see on the on the daily time frame that price is bullish. There's a potential for price from this most recent low to go upward and break structure to give us the opportunity for a higher. It means price is bullish on the daily time frame. Now we want to scale to the 4 hour time frame. What do we do on the 4 hour time frame? We don't need the whole of the chart, right? The same thing we did on the weekly time frame when we were scaling from the monthly to the weekly. We did it on the weekly to the daily. Now we're doing it on the 4 hour time frame. Remember, the lower the time frame, the lower our area of focus. Now on the daily time frame, we focus on all of this zone, right? On the weekly, sorry, on the 4 hour time frame, we don't need to focus on all of this zone because it will not be relevant, right? Because we need to focus on the, we're already within the 4 hour time frame looking for trading opportunities, right? So what do? We look for the most recent low that caused a movement, right? And the most recent high, right? Actually, this high, this is a high, right? This is a high, this is a high, right? This is a high, right? Looking at these highs, which is the most recent high? This is this high was formed on May 2025. This high was formed on June 2025. This high was formed on July 2025. This high price is at this high, right? And this is September 10, 2000, sorry, this is the 10th of September 2025. So basically, we have four highs. It's true, this high is very high, more than this and this. But as I said, it's very simple. We focus on the most recent low and the most recent high, right? Basically, that's it. Focusing on the most recent low, I would have focused on this low, right? But we did not focus on this low simply for the reason that the original move started from here, right? The original move started from here. Price retraced up to this level before started giving up the movement up. So there's a potential for price to break. And if price has to break, this will be the most initial move. That's why we focus on the most recent low, which is here, that caused the move, and now we're on the most recent high, which is here and here. Now based on that knowledge, what do? It's very simple. We shift our tool from the left up to this point, right? Now there's a possibility here. You can either focus on this most recent high, right? Or what you do is you focus on the most high, the highest point in time. Why? It's very simple. Remember, we are focusing on all of these charts at the moment on the daily time frame, and going down to the weekly time frame, going down to the 4 hour time frame. We want to focus on a particular area of the chart on the 4 hour time frame. This is not relevant to focus on all. As I said, what do? We scale into the most recent low and the most recent high. This is the most recent high, but this is the lowest, this is the highest point. Now, and remember, our chart, our tool, our Fibonacci is already marking this high. What do? We cannot scaling down here like this. We cannot bring down our Fibonacci tool like this to focus on this low, because we keep going up on a bullish market. So from here, what do? We shift our tool to this lowest point, and we drag it horizontally to make sure we align. Now, since we are aligning, we know if we go down to the 4 hour time frame, this is our area of focus. Then now we can scale into the 4 hour time frame. Being into the 4 hour time frame, we can start looking for buying or selling opportunities, right? And guys, that's how you analyze price structure. This is the best way to understand the market on a larger perspective. We analyze the market from the monthly time frame to the daily time frame to the 4 hour time frame and so on, even to the 15-minute time frame. And living from the monthly to the weekly to the daily to the 4 hour time frame, we continue to reduce our area of focus, right? We continue to reduce our area of focus until we are able to have a clear picture of the market on the lower time frame. So that's basically it, guys. That's all for this video. Thanks for watching. I hope you get some knowledge for it, guys. This was a video to teach you guys how to analyze market structure in the best of its form, and I hope you are able to understand. Stay, if you understand and you have questions, Type on the comment section, like, comment, share. If it's your first time visiting the channel, subscribe to the channel, and you will never miss some again on my videos. I'll be giving more educational video, guys. Stay tuned, stay safe, and stay blessed. Bye bye.